Hello, everyone, and welcome to another episode of the Reinsurance Podcast. I am your co-host, Jerad Lee.
And I'm Ben Rose.
Welcome, sir.
Welcome to you. And today is not just a normal episode, it is a news update. The news update for October 2022.
Which we're recording a little bit early because...
Dun, dun, dun.
Well, you'll be in Baden-Baden.
Yeah, this is true.
Yeah.
I won't be here in the studio.
No.
I will be out enjoying the traditional Baden-Baden Reinsurance Conference next week. So if you're there, come and say hi. You'll find us at Leo's most of the time. Brilliant. But on to the news.
So diving into the thing that's been driving the news pretty much across the industry for the last few weeks, and will certainly be sort of the topic of conversation in Baden, is Ian. There's
Ian.
Ian, for those who don't know, is the massive hurricane savaging Florida right now. But there's sort of a number of articles and stories about this, as it's one of the bigger stories. But you're seeing sort of the loss ranges beginning to tighten a little bit. When these storms first hit, the ranges are comically large.
Yeah.
You'll see on the low end 20 billion to like 130. Like it's just
It almost becomes a competition, doesn't it? To who can put out the highest number?
Yeah.
Because that'll be the one that grabs the most headlines.
Yeah. But the one here is just saying Fitch's has increased their loss range for Ian to be between 35 and 55 billion, aligned roughly with the sort of 42 to 57 range by Verisk, and then the 30 to 60 range by Cat Risk and some others. RMS 50 to 75. So still quite a large spectrum. 75 at the top, it looks like 25 or 30 at the bottom. So
you need Superseed to help you
Yeah.
get that quality
Exactly.
data. No, but basically, it's going to be a big loss for Ian. We don't know how big just yet, but the numbers are being refined on an almost daily basis by a variety of industry commentators. One comment that I thought was interesting amongst all of these various numbers that are flying about was actually the reminder, I guess, that Ian might not be the last big storm of this season.
Yeah.
We're still seeing very active patterns in the climatosphere, I was going to say.
We are not geologists?
No, or the other
Meteorologists.
meteorologists.
Oh
yes.
my God, we're gonna.
So keep an eye on the Atlantic Basin, and we will see what happens next.
Yeah. The other thing they touch on just interestingly in the Fitch article is referencing that the insurance-linked securities, the ILS market, is likely to absorb a significant chunk of this. So again, that was a really popular area for ILS a few years ago, and they've been sort of battered a few times. So we'll see what that does to that space.
Yeah, and whether you have the trapped capacity issues again or not. I guess. Yeah.
There was sort of a similar update. There is sort of this update here on Florida reinsurance to be limited from this Citizen CEO. Again, this recognition that the market conditions in Florida specifically now are really hardening, and capacity sort of drying up, and they're looking at it going, especially for lower layer coverages, as reinsurers move away from that, what do the underlying insurance companies do? What are the alternative options that they have available to them? So one that will still be an area of focus, but people are beginning to kind of get a bit of stress around how they navigate this stuff going forward.
Indeed. And it's interesting looking at withdrawal of capital in general, because we've seen that not just in Florida, but also a few commitments made around oil and gas over the last few months. And one thing that came up in the news this month, which I think had been a question on a lot of people's minds, was, well, how are you going to support those same enterprises in transitioning? Because especially at a time of crisis, when it comes to energy, how do you provide something, some sort of carrot to these large oil and gas producers? And actually, Munich Re was in the news recently for supporting an initiative with One Nexus this month, which is very exciting. Actually, they're providing more than $1 billion of capacity to support the retirement of assets that are not fit for our green future.
Yeah.
I guess so. Showing really well there the power of reinsurance to support a transition to something else. So, good to see.
Yeah, I think it's one of those areas that, as you've said, is often ignored. Like, if we're trying to get to this sort of alternative, better, greener future, you can't just sort of draw a line in the sand and sort of cut those things off. There are people, and there's sort of families and societies and communities sort of built around those things. So it's important to wean down from there, but like there is support required in that transition. I think it's a fabulous piece of work that Munich's doing in support of that, hopefully with a longer sort of end game in mind. We touched on sort of the cat losses already at 100 billion. Aon's projecting that to continue to climb, so it should be an interesting end of the season here. The other article that sort of popped up that was of interest to both of us was Amlin's sort of win against a COVID BI dispute claim against a UK pub group.
Yeah, I think we'd all been watching for a really long time. Again, it shows how well the UK court system is moving cases through efficiently. But I finally got some clarity on this, which I think had become a bit of a landmark case where effectively a number of pubs that faced a range of potential heads of issue around, was it government guidance, was it COVID, what was it causing business interruption, but ultimately I think on all the basis of a suit that had been made against Amlin for refusing to pay claims, which will set the stage I think for a lot of other insurers and thus reinsurers who are sat reserving for potential exposure to business interruption COVID claims like these. Hopefully this signals for them a bit of clarity as to what to expect from these actions still in progress from a lot of firms that have suffered during the pandemic and trying to get it on their insurance when they might not necessarily have coverage for that.
Yeah, well, I mean, it's one of those cases where people had insurance for a pandemic, and people didn't have insurance for a pandemic, and it was a really hard couple of years for a lot of people, and restaurants and pubs and the hospitality industry as a whole really, really suffered. And, we won't do anything to sort of take away from the difficulty of that process. But if you didn't have insurance that covered pandemic, like it's a really tough break, but like that's the way it is. And I think you're seeing the courts now ruling to say, yeah, I mean, if it explicitly didn't cover this in your policy, that's the way it's going to be. I'm sure there's a lot of relief from most of the other insurers who had sort of these types of hospitality in their portfolio that are kind of taking a breath of relief, that knowing the courts have ruled that if it's covered, you should pay, but we're not going to make this free money.
Yeah, amid the current tumult of the UK, it's good to see that the legal framework is holding up in a predictable way rather than
yeah, exactly,
going down a more sort of random and penal route. So that's reassuring.
Were there any other stories that you wanted to touch on? There's one more I've got here about the PNC coming in from the Aon team. The PNC underwriting profits rising, but the net income falling significantly in H1. So a bit of a shift for the underlying insurers as prices go up, sort of seeing a bit of profitability at long last, but the sort of net income by which they gain that not really being there.
Yeah, we'll be watching, I think, as we get to various half-year results coming out and so on. But I always write my Lloyd's piece on those results, so we'll see what the market looks like in terms of projections for the end of the year as well. But definitely one to keep an eye on. Yeah,
I think when you look at the news and future news updates on the Reinsurance podcast through the end of the year, there's a lot happening. In advance of the 1/1, in advance of continuing to climb catastrophe losses, now on the back of a sort of growing inflationary environment, it's going to be some really, really interesting updates. So keep your eyes peeled for more updates from us, and we'll try to keep you abreast of industry news.
Or come to Leo's in Baden-Baden.
Yeah, or see us in Baden-Baden. Thank you, everyone. Have a good afternoon.
Or morning.